TGIF, my trading warrior brothers and sisters. How's everyone doing? Hope everyone had a good week. Glad to be wrapping it up. I faded the BOJ last night on this third drive spike. Here was 1, 2, 3, 89. I did it, and I had a cover at 50. Low was 49. I think it's interesting here. One thing I know for sure is that as sure as you could be in this business, is this confluence of moving averages and broken resistance at 11.5 is very important in the market now. So the yen rallied back 78.6 of the break that it had from the high over 112. And here's another moving average on the 4-hour time frame, comes in at 50 as well, 45.50. If we should take this out later in the session or any time without making new highs first, then the next move would measure back towards 1110, right back into here. That'd be the measured move. 40 minus 1150 gives you 1110. So back to this major support level. And then if we take it out, 109.50 is my swing target. Here's 110. So looking for 109.50 if we take out 111.50. That's the way the yen looks. I know the stock indexes are strong, but and it may not mean anything, but so far anyway, we haven't taken out the midweek high. This may have been Tuesday, I believe, the high of 28.2170. So far, the high has been 28.20. So still a lower high marginally. Same story in NASDAQ. NASDAQ missed its high by a bit more than the S&P. So we'll see. Sometimes you get a failure on Friday, but it's been such a strong week. And when we get to Fridays, you have to look at what happened on a weekly basis. And I'll tell you, this is not what I expected this week after the very negative candle. So for the week, great action. You know, a lot of people are starting to talk about new highs in the S&Ps and new highs in most of the averages now. So, you know, this is a pretty important stopping point in the S&Ps. Some people are saying 28.40 and then we get a correction. Anyway, you cannot take away, unless this candle is as meaningless as last week's candle, but looks pretty good. Getting a bounce in gold, and part of that's, you know, the fact that the yen came off, and crude, something I want to talk about that could be setting up. On the weekly, it looks like we got to the broadening top, but on the daily, we didn't quite get there. It comes in around 59.50, but lots of divergence. In fact, pretty glaring divergence on the crude up here on the 1 hour. See this? This peak was your confirmed high, and then, you know, we started diverging, and even on this pop at 70 or under. So possibility we don't get to that broadening top line and that we begin a correction. I'm really not in, we're going to see $65 right away. I still think this broadening top line is going to come into play. And I may be in some disagreement. We have some pops in the metals, but something I just wanted to show that is a possibility in copper. I know most people are bullish copper, and it's been acting great and has come out of triangles and everything. But when you look at the weekly, that's your daily. Kind of a negative week setting up. So is there one more pop to $3? Could be. But when you think about what the stock market has done in 2019, all we've done is recover back to old support, new resistance around this $3 level. And if we start taking out 285, I could make a case for copper taking out these lows, which could be some type of descending triangle in longer term. That's going to measure quite a bit lower, 250, 330. That's, you know, going to take it back down to these lows. So I'd be careful about the copper. As I said, gold and silver about destruction. This is about construction. So I guess the theme and things I'm looking at that may not play out immediately here is that industrial commodities, economically sensitive commodities, could be under pressure in the coming weeks. So we'll see what happens there, but I'm not bullish copper. To me, this looks like just a corrective action after a pretty impulsive wave to the downside. We've been marking time, some fib retracements, and if we fail from here and just have equality, 80 cents from here would take us down to 220. So I'm a copper bear. They say that copper has a PhD in economics, so if we're going to get a break in copper, although I've seen it before, they say all bull markets are roofed in copper. So even though the S&Ps have been very strong, all the stock index have been very strong, we're still not at 2940 in the S&Ps. So this still could be one big failing rally, and I'm not looking for a crash, but I've been looking for a correction of the rally that we've had in stock indexes for the last few weeks. Thought I had it last week. Something else I'd like to point out, silver again, it was weaker than gold, but it's outperforming. It's having a decent week. Keeps holding where it has to, okay? So, you know, this was the low that it held that was important last week, this 1490, and we're putting in a higher low. If we get through 1560 in the silver, I think we're on our way to new highs, maybe up to 17. I can't get real negative on it. The gold looks worse, but you know what? Everyone thought 1310 might have been it. Maybe we still get that rally to 1320 in gold. So who had a good week? Hi, Ash. The team is bright as a diamond. You better put on your shades. We left a historic mark on New York City with our international crew and headed up by Joe Perry at the expo on Real Vision TV, on Bloomberg. We're everywhere. So anyway, Ash, nice to hear from you. Everyone, Friday's one of my favorite days, even though I do it almost every day, to tell you it's a good day to subscribe because you have the whole weekend to navigate, right? And you have the whole weekend to, you know, bone up. Your best trades for next week are going to happen on the kitchen table or on your workstation Saturday and Sunday. So some of my best trades are planned. You know, you look for areas, you write them down, you're ready to execute so that you're not trading on the fly and have FOMO. So if you have a plan and you know what you're going to do on the weekend, then the rest is, I'm not saying easy, but easier, because all you have to do is execute, and this is going to help you. And being part of the members chat with Amanda in there and Joe and all the great traders that we have in our community, that's going to help you. I teach surround yourself by traders better than you. And I'm not just giving advice. I took it when I joined the team almost 2 years ago now. So for people that have been following me for a long time, you may have noticed that I have a little better edge since joining ForexAnalytix, and that's because of the crew. So take a risk and minimum trial, but you know, go for at least 90 days, 6 months. You probably risk that on one trade, a year subscription. If you trade full lots and risk 100 pips on a euro trade or 70 pips on a euro trade, it'd be a great invest in yourself. Okay, you want to be a trader, you want to learn how to pull equity out of the market. You're not going to find a better team of people that have different methodologies. And you, like Jack Schwager, when I interviewed him, he said, I asked Jack, what's the most important advice you could give people? And he said, find a trading style that suits your personality. So is it Elliott? Is it harmonics? Is it basic technical? Are you a candlestick guy? Are you just don't want to be trading every day and you're looking for macro position trading, it's all here. And the representatives of each methodology, I think, are the best on the street, the best on the highway, the best in a high rise. So you really have, you know, a lot of selections to find what type of trading suits your personality. We have, you know, longer term calls. We have, you know, 1 hour calls. You get all of these. You get daily, you get 4 hour looks on basic technical. And, you know, Blake's charts are so good that, you know, people come in and copy his work and say it's their own. Same happens to Grega all the time. So you don't have to copy anyone's work, because you're not only going to get it when you're on your website, you're going to get push alerts to your workstation. You're going to get push alerts to your phone if you're away. You could count on the eyes of Blake and everyone else to alert you if something's happening, if areas are being breached, and it's going to be a big edge for your trading. Yes, we still are doing this on YouTube. We did have this once in a while technical difficulties like the other day, Clay, but 99% of the time YouTube is up and running. Okay. So Blake, I know you're pretty happy it's Friday. Am I right? Is that a good call?
Hey, okay, I'm back.
Pure tourist trap stuff. What's that?
Yeah. Steve, he was, I was responding because he sent, he put a picture of him and Grega and Joe in New York in a big New York frame. I'm like, oh man, that tourist trap stuff, it got you.
Oh yeah.
And when he goes to
$100 because they have a backdrop, huh?
Yeah, when he goes to Vegas, he gets the fuzzy dice. It's great.
How you doing, bro?
It's Friday. I'm happy it's Friday. I'm tired. I'm like sitting here and my eyes are watering. So
yeah,
that tells me that
first week of the time change, you know,
it'll
take you about I don't know, month.
Yeah.
You'll be used to the prison routine.
Yeah, I guess so. Yeah, it does take about a month before I'm really adjusted, and then we got 6 months of hell before it's back to nice.
You, again. Me, and Paulie wake up the roosters.
I complain about this time of year, and it comes with, you know, good reason. I mean, for us in Arizona, the most beautiful time of the year. Like, let me just give you an example. One of our vehicles is a convertible. We always have a convertible. It's Arizona. It's, you know,
right.
7 months out of the year, the top is down. That we are going into the like the 5 months out of the year where the top actually goes up and it doesn't come down. And I you know, yesterday afternoon, it's been raining here a lot. I'm sure it's been raining for you guys, and it's made its way to Arizona, which is great. In the desert, we thrive when it rains, and this has been one of the wetter.
California is out of drought conditions for the first time in a decade.
Oh wow, that's amazing. Well,
how much rain we had this year.
We get the backlash and the over spill, I guess, from California weather. And you know, I had to wash the car yesterday, and I put up the top, got the car washed, and I just washed the outside because it was outside for a little bit out of the garage, and I put down the top and I dusted off the interior because the top's been down for months, you know, so it's dusty on the inside. But you know, it's getting that time of year. Like I said, I complain a lot because I get a lot less sleep this time of year, and it gets really hot here, so it's not good. But it's just Friday, and you know, the guys and I at the Gellos office, the office I trade out of, we were just chatting about the U.S. dollar Canadian. I do have a long in the U.S. dollar Canadian. I've been holding it for the last couple of days. My cost average is below where we're currently at, but I'm going to explain this chart that FX Macro tweeted out that I sent the office, but if you're a ForexAnalytix subscriber, you got this yesterday, day before yesterday. Well, you've had this chart basically. This hasn't changed at all. And I put in a pattern in play yesterday, but let me explain to you what you're seeing here. This is let me go to a 4-hour chart of the US dollar Canadian. You can see we have this inverted head and shoulder pattern. It's a retest of the neckline. That's the dotted line here. The inverted head and shoulder pattern points to 136. Okay. Now, if you look at this as a flag, it also confirms, if we break out here, that we're going to 136. Okay, so that's all fine and dandy. Now, crude oil is weak at the moment, but it's Friday. I'm trying not to get too terribly excited about crude being weaker, although I would be happy if crude sold off like $3. It'd make my day. It's not going to do that. I'm just saying if crude, sold off to like, let's say like another $1 from current prices, the dollar Canadian might actually benefit from that. And you might, actually start to see a break higher. But the guys in the Gelos office are like, look, Wilkins came in last night pretty dovish, and everybody thinks that in the office thinks that the Canadian economy is in a little bit of a pickle here, and also we are debating over the next few days USMCA, the need for it, and in the event that the USMCA doesn't pass Congress, but which I don't think is going to be the case, you could really see some serious selling in the Canadian as a result. You might. So, but there's potential for volatility in the Canadian currency. Now, I look at the technicals here, and we stopped at the 50% retracement, excuse me, of this move, 50% retracement of that move. We are at channel resistance, and even this little double bottom here, intraday, double bottom, if you take the 132.90 to 133.50, that puts us at 134, which is a 618 retracement. And that could happen today. If we get a breakout here, we could actually make a move to 134 pretty easily, just from a double bottom technical perspective. So keep your eye on the dollar Canadian. I think I'm trying to, I'm searching for things to do, obviously, looking for things to trade because it's a slow market. Now, one of the things that I could quite possibly do here for you guys is build the bias chart for you, since we've got some time. There we go. So let's do this really quick, because I think Andre's coming on today. So let's see.
I'm actually coming on today.
Oh, no. All right, well, forget the bias chart. We don't have to do that. We're not going to do that today because Steve's talking. If Steve's talking, that means I got nothing else to say. So yeah, how's it going, Steve? Welcome back.
Good, thank you, mate. Nice to be back.
So before you tell us all about New York, give me a few minutes just to run through these majors really quick.
As many as you like. All
right. So so the euro dollar, just real quick, I'm just gonna go over some of these majors. And by the way, we do have, let me just double check here. We have manufacturing sales out of Canada, pretty minor data, but we have Empire State Manufacturing also coming out. Also shouldn't move the needle much, but we'll pay attention to it when it comes out. The euro dollar struggling at the 618 retracement once again. I don't necessarily think the euro is a short right now. I actually think we're going higher to this trend line at 113.60, but I'll give you the buts. The risk reward favors shorts right now, just because if you're like, well, I just don't want to risk above 113.40, you could do that and just keep a really tight stop. I think that you can trade it that way. I'm not trading the euro at the moment, but if I was Going to trade it from a risk reward perspective. It's a better short than long after this nice, climb higher, divergent relative strength. It's probably a decent short. However, like I said, I'm not on the short side. Just trying to give you guys some clarity as far as where we're at in the euro. The pound, it's a mess. I think in order for me to be bullish the cable or the pound in general, we're going to have to see a move above 133.50 on a closing basis this week to really negate the idea that this is an ascending wedge. So if we closed up here by the end of today, that would be something. Now, we have a vote coming next Tuesday, which will be the 19th, and Stelios could probably shed some light on what that vote is, because frankly, I'm extremely tired this morning, and I missed it because I'm not really focused on the cable at this moment. But I know there is a vote. I have to go see what that. I have to go back and see what it is. I'm sure Stelios might actually be Google searching at the moment.
He's not here, mate.
Oh, he's not. Okay, so
Today
there's
he has Parents' Day in School of Girls, so he left to attend.
Well, the good news is I'll never have Parents' Day in School of Girls because I have all boys. So that's
I feel you.
So anyway, but the cable might be confined until next Tuesday in this range. The Aussie, I still think is trading heavy after this inverted head and shoulder pattern completion. We completed the inverted head and shoulder pattern. With stocks as bullish as they are, trading at 28.20, it's hard to be short. But at the flip side of that is it's not playing out to the upside either. The Kiwi, is still range bound in the triangle. Nothing's changed there. We are smack dab in the middle of this symmetrical triangle. Nothing to do. The loonie, I talked about the loonie. The peso. The peso is testing the 618 retracement. I'm sure Steve's going to have a little recap on his Real Vision experience on the peso. There is channel support that comes in just below, which comes in around 1920. But if crude a little weaker, if stocks pull back because of quadruple witching today, which is possible, you're gonna, if that happens, then the peso will probably find some support down here at channel support. I haven't even looked at the Nordic currencies today. Swissy's just bouncing off the 50% retracement still. The US dollar Norwegian krona is a little weaker. However, we are at that 88% retracement again. If crude stays weak on a Friday, that could allow the US dollar Norwegian krona to maybe post a bounce here, because you'll notice that even though we hit new lows in price, you guys can see that, relative strength did not. So it's a divergent relative strength. So that means that that the US dollar Norwegian krona is falling on less strength, which is a risk if you're bearish. US dollar Swedish krona, a little bit of a breakdown here through this trend line, and that makes sense as the euro is stronger. However, if the euro stalls at this 113.28 again, then the US dollar Swedish krona, same as the Norwegian krona, a little bit of divergence here, we could always bounce.
Blake,
and
both of them have something else in common. Of course, in a different time frame, but they both so far have got rejected from a previous high. So USD NOK in danger of a double top, and USD SEK also, but you have to zoom out a little bit more to see the previous high in USD SEK that we actually tested.
Yeah, we this week we really discussed, Steve, how, and I'm going to say this: if there is any currency that I wanted to be really bullish the dollar against, it's the Swedish krona. It is by far the bullish looking dollar currency. Has it rejected a big resistance? Yeah, sure, it has. However, if you look at this chart versus any other dollar chart, this is the most bullish dollar currency on the block. So
I agree. This also looks like a massive cup and handle formation, right?
So yes, it does. And so with if in the event that the dollar starts breaking higher, like let's say the euro, and I'm not talking today, let's say the euro starts breaking through 111 and we're on our way to 110, 108, the US dollar Swedish krona is going to go a lot higher. And I mean, our flag points to 10 plus on the exchange rate, which, it seems not possible right now, but again, we're going in the FOMC next week. I was just reading a JP Morgan piece right here about how the JP Morgan is expecting look for no hikes this year, 0. But what if that changes? What if the FOMC is way more hawkish than we thought? How about if Chairman Powell bucks the Trump trend? What if? And the dollar goes berserko? I wouldn't want to be short the US dollar Swedish krona, plain and simple.
To be honest, in my opinion, Blake, the chances of something like that happening are not high, but there is also the alternative. What if they turn more dovish in the European continent, right? Because that's also a way for the dollar to gain.
Well, the problem that the Fed and the rest of the world has is the Fed has to raise rates because our economy, I should say the U.S. economy is outperforming globally, and other central banks are trying to cue off the Fed, which is inappropriate. So you're right. If the Fed, is, let's just say, a little bit more neutral to hawkish, and then the rest of the world's like, well, shoot, we can't keep up. We have to continue with our dovish stance, whether you're talking about Sweden or you're talking about the European Union or what have you. If the Riksbank or the ECB, that divergence in monetary policy between the U.S. and other regions of the world will favor the dollar. And so you're absolutely right, Steve. That's entirely possible. And because it's not unfortunately, central banks have been moving in a one size fits all shoe. The Fed's raising rates, so we need to be a little bit more hawkish. The Fed's pausing, we need to be a little bit more neutral. That would be the case if all of our economies were running at the same rate. Unfortunately for the rest of the world, they are underperforming the U.S. economy right now. And that's not to say that's always going to be the case. That just happens to be the case right at this moment in time. So yeah, you're 100% right in that assessment. The dollar yen, one last thing. The dollar yen is extremely bullish. And this is, Dale asks, hey, did everybody have a good week? I actually did not have a good week. I've lost money this week. And the reason why I lost money this week is I had a pretty aggressive dollar yen short going through this, it looked like we were here. I can just draw it out for you. I had a pattern in play too, going as well. Let me take this thing off. What is that? Oh, the magnet. So I had a bear flag, and I was looking for lower levels, and I was pretty aggressively short the dollar yen. I got stopped out of some of it on that break higher on, was it not last night but the night before last, and then I took the rest off yesterday when we dipped down here. I just took the rest off. I'm just like, you know what, I'm not going to deal with it. Unfortunately, that trade put me in the negative this week. So, but I have to point out the dollar yen is extremely resilient, and a lot of that has to do with equities that have been super strong as well. However, with you look at like the S&P up at 2,800. Whoops, that's not what I wanted to do. The S&P up at 2,800. The dollar yen is actually underperforming, the S&P, which what that means to me is if the S&P does eventually roll over, then we're going to see the dollar yen probably roll over. It's just it caught me off guard on Thursday or Wednesday night, Thursday. So therefore, I'm just kind of not even dealing with it right now. But like I said, you take the dollar yen and you match up the S&P 500, and you'll see that the S&P 500 is up against resistance. Dollar yen, not so much. So and that might have something to do with yields that look a little weaker as well. Okay, data is coming out. Stand by. Speaking of dollar yen. A little bit stronger Canadian data just came out. Expected 0.4% on manufacturing sales, 1.0 came in. So a little bit stronger data there with the Canadian data, which has pushed the dollar Canadian down just a little bit. Empire State Manufacturing came in weaker than expected, so that's hitting the dollar a little bit on. You can see the dollar yen's coming down just a hair. All right, and S&Ps obviously are unfazed and actually probably enjoy the fact that the U.S. Economy is a little bit, better than expected. So with all that being said, I'm going to be passing it over to Steve. Steve, are you ready to do some analysis?
What's that?
Are you ready to do some, analysis? We haven't seen you in the longest time.
Yeah, actually, I had to spend a lot of time today updating my charts in the morning because in the US I had so very little time, so I just did basic stuff. But yeah, I'm absolutely ready.
Welcome back, buddy.
Thank you.
And just so you guys know, it's not just Steve coming back. We have Andre that's going to be here sharing some charts on harmonic patterns too, which is always a treat for all of us, I think.
Absolutely.
All right, Steve. So wait, you got to show everybody your I got stuck in the New York tourist trap store picture. Just kidding. It's great. I get stuck in that stuff too. When I go to Greece and I'm buying, whenever I go to Greece, I always buy all the touristy stuff too, because that's what we do, when you go to a different country. So that's awesome. That's awesome.
Yeah, Steve and Grega weren't sure. They were waiting for a Hawaiian woman to come up and place a lei over their head.
hey, but yeah, wrong part of the United States.
Oh yeah, okay, yeah, that's what I'm thinking about.
By the way, Hawaii. Steve, I just want to say, really great job on Real Vision. I saw the video. I think it's a real treat that you got an opportunity to be on there. I think it's a real treat for the Real Vision people. I saw so many pictures from the trade expo. It looks awesome. You did such a fantastic job, and you really represented our company well. And I think the FX community
Thank you. It was a pleasure.
had a really nice treat of having you there. So congratulations on a successful trip.
Thank you. It was a pleasure. I met some, interesting people, people that, are from New York and joined our community. We even had some people flying in. It was great meeting everybody. We had a nice time as much as possible, with all the work stuff. And yeah, it was a very productive trip. I'm looking forward to doing it again next year.
Awesome. All right. And next year I will not be closing on my home on the exact same day. So
exactly. Yeah, exactly.
I'm coming too, man. I'm coming too next year.
We're even gonna have to bring Coach. All right.
Yeah.
So, hey, you guys have a great Friday. And thanks for being here today, Steve. I know everybody missed your voice, so it's nice to have you back.
Nice to be back.
Have a great week, Blake, buddy.
Thanks, guys.
Steve, it is. I miss your stuff. You don't know if you miss something until it's not around.
That's very true.
Ever notice that? You don't know what you've lost until you've lost it.
Yeah, you know how it is.
I'm so glad you're back, man.
Okay, I'm going to give you a hug after the webinar.
All right. Yeah, really. So crystallize the screen for us, buddy.
I hope that's what I'm doing.
You do.
Let's jump on the charts. And since we had some Canadian data, I have to say that the Canadian dollar is at an interesting juncture, in my opinion, because there are actually two possible interpretations here, and I think we're going to know very soon which of the two is the valid one. I was looking for more downside, for at least one more leg lower when we were apparently in a triangle, apparently back then in a triangle, but then we broke above it. which left us with this likely inverted head and shoulders formation. But I was still didn't feel like the picture was complete, because I had every reason to expect at least one more little push lower to retest this longer term channel, and we got some follow through after breaking higher. But as you see, we stalled and pulled back from the parallel of this trend line. So now we're back testing this triangle, and it's all about what's going to happen from here. Because if we find support at the broken triangle's trend line resistance, then good, we can resume to the upside and USD CAD remains bullish. But if we actually break below this 133 area and close below it, then I think we might have trapped people being long at the worst possible spot. And you know how the markets are. They want to inflict the maximum amount of pain to the maximum amount of participants. So let's see what's going to happen from here. I'm really, really interested to see. Obviously, USD NOK is more or less a trade that a pair that trades similarly. Technically, it wasn't the same situation here with the USD NOK. USD NOK had what looked like a pennant. We got that move higher, but we literally just ticked the previous high and then reversed lower. Now we still maintain this ascending channel. I mean, it's still holding just fine, and we're still, most importantly, we're still holding above this longer term blue channel, which in essence held price action as long as it remained corrective for almost like 3 years, 2.5 years, whatever it was. So it's quite interesting to see what's going to happen from here. Obviously, if for any reason we break below 840, we're going to have a massive technical event, because at the same time we're going to be violating this breakout from this corrective formation, and at the same time we're going to be triggering a double top formation, which is going to have a range from 840 to 882, which means that it's going to be targeting at least a pullback to 8. So USD CAD, USD NOK look quite interesting to me. There is no trade yet there, in my opinion, but I do think that within the next few days we might have something actionable. Now, one of the ideas that Greg and I talked about they wanted us to give them some short-term ideas. Actually, I did 2 pieces on Real Vision. One of them was a longer-term idea that's going to be like available in 2-3 days from now. But he wanted like something actionable in the short term. So the short-term ideas we provided were a continuation in copper to the upside and a continuation for USD/MXN to the downside. Both of them, from a technical perspective and from an Elliott wave perspective, look likely like having completed a corrective pattern. Of course, as we've said many, many times, corrective patterns often unfold in a more complex manner than they initially let you believe they will. So, there's always a risk in that. But, the good thing with playing a continuation in corrective patterns is that, first of all, you're trading with a short-term trend or medium-term trend, depends on the time frame. And the second one is that you have a good, usually sometimes even an excellent risk-reward ratio. So USD/MXN at the bottom of this apparently corrective channel. Of course, we need to see this play out. We're targeting 1860. If we get a breakdown, I still believe that this is a very nice looking trade. I mean, statistically speaking, I think it has very, very decent chances of playing out, and you have a very manageable risk in this case. So I started
wrong on copper, Steve. Where would it negate the bull case for you?
That's the problem with copper, which isn't that much of a problem with USD/MXN. And let me explain what I mean. until like the day before yesterday, a very easy interpretation with copper was that this was the bull flag, this one. We were actually here. We were actually here. Okay. So this could have been the bull flag, which we were already breaking above. But then we got that, big day yesterday to the downside. Of course, this breakout area at 286 to 87 is still holding. So the bull case is still absolutely, alive.
So under the blue line, it becomes more doubtful, the bullish scenario.
Yeah, not necessarily, because you know something, it can invalidate the great risk reward opportunity that we in essence produced, that we talked about, but depends on how the price action unfolds. Because let's assume that we do break below 287. How do we do it? Do we do it like this? Then yeah, it completely invalidates it. But do we end up doing it like this? Then no, it doesn't. You know what I mean? I mean, if the price action keeps unfolding to the downside in a very choppy manner, like, slow, depreciating manner, I will still tend to believe that there is one more leg missing to the upside. And from an Elliott wave perspective, that's what we also showed. We think, and the good thing with both of the trades that we produced, I know you missed me, but now I have a show. Thank you. That was my cat. My cats missed me as well. Actually, they've been stuck on me all day long.
They're usually hungry when they talk.
No. She just wants to be petted.
Oh my! What a nice.
Yeah. The problem with her is that she's very stubborn, as as women often are. She's extremely stubborn. I mean, no matter how many times.
Or it could be environmental, I mean, we are. Anyway, on copper, just take a look at the weekly here, Steve, and then I'm going to leave you alone about copper and tell me.
Let me say that it's worth watching the Real Vision. By the way, if you haven't tried Real Vision, there is a free. Let me show you. There is a free trial, if I remember right.
Content just got better, in my opinion, on Real Vision. With Joe Cherry and Steve Bulgy, in my view. But they have great guys on there.
So where are we? Here we are, actually. I don't know why they haven't.
Steve, I interviewed Raul, and he was live at his pad in Little Cayman. Well, man, I mean, there's wood all over where he was doing the interview. It's like his house. And then through the window, you see the ocean. It was just, I think there's only, I don't know, a couple hundred people that live on Little Cayman.
Yeah, I have to tell you that everybody was extremely professional in Real Vision. We had a very good time. They knew what they were doing. And I'm happy to say that we actually, brought something new there. In what sense? They had never, this segment here is called the technical trader. And they always have one person doing it. So I suggested to them that, Greg and I have a lot of experience exchanging ideas on the show, and that we can actually do a two-man technical trader, and it's going to be good. So the good thing is that, the director there was initially a little bit skeptical, but, he said, okay, let's give it a go. And it went very nicely. And cool. I don't know, they might do it in the future again.
Nice.
Yeah, so, we had training, of course, on Face doing that with Grega. So, we enjoyed it very much. I also had an interview there with Justine. She was great. We talked about my medium-term idea. So it was a very good experience. You can, go to Real Vision, start a free trial, and you can watch it there. And in a couple of days, the other segment is going to be up as well.
Hey, Steve. Hey, Steve, it's Joe.
Hey, Joe.
What's up?
I'm good, man.
I miss you, man.
Miss you as well. We spent so many days together.
Hey, I just wanted to let you know that the trade ideas that you did and the ones that I do when I'm on there, those are actually free content now. They're putting out a new segment called.
Oh, they are. Perfect.
They're putting out some material called The Edge, and anything that is in The Edge will be free content, and Trading Ideas, which comes out every day, will be part of that package. So look for that. But if anybody wants to go on there and look at at past ones or past trade ideas that I've done, or the one that Steve has done. If you want to go back and look at that, you could just go in there and search our names, and the trade ideas will come up,
Okay,
and you can get free access.
We'll tweet it from the company's account then. Okay,
yeah.
Perfect.
Just want to let you know that.
Perfect. Thank you, Joe. Thank you, Joe.
Cool.
You know, it was great being there in New York with you. Had a lovely time. Thank you for everything.
Yeah, it was a lot of fun. We had a really good time with Greg.
I heard you guys met Trent too at Forest Park FX or stuff.
Oh yeah, we had dinner
we had dinner with him.
Cool.
Yeah. And his wife, very sweet.
Trent looks like he could talk of basketball. What do you think, Joe?
Oh, he's a big runner. He's a big runner.
Okay.
Yeah. Trent
he
was
like an athlete, that's for sure.
Oh,
he's a track star. He almost went to the Olympics, I think he was saying.
Yeah,
wow.
Yeah, I think medium distance, he was running like 3 kilometers and 10 kilometers, something like that, if I remember right. Yeah, and he's very, very fit up to today, very, very fit. And
I was in the Senior Olympics, and it was the event was how many times during phase can I get back and forth to the bathroom and back to my desk without anyone knowing about it. I got
You're a champion in that. You're a champion in that.
Yeah.
There's nobody to challenge you in that. I can tell you that much.
Anyway, a lot of training. You know, I study all night for my urine test. All right, guys. That's the end of my stand-up routine. Right.
So
I'll keep my day job.
Yeah, which you're the best at. So having to do with USD yen, to be honest, I just wanted to say a couple of things about it. People shouldn't forget the big picture here, and the big picture is that the USD yen has been trapped since summer 2015 in this longer-term symmetrical triangle. And we might be in an ascending channel within the triangle, but in my opinion, the closest we get to this trend line, the bigger the risks that within this triangle we're going to get a move to the downside. So Blake said that he didn't have a good week because of that, but I still believe that before we see a bigger move from the USD yen, eventually likely to the upside, I'm not going to deny that seeing an eventual breakout to the upside is a high probability scenario. I think that it is very likely that we're going to see more weakness for the USD yen within this triangle. So I can easily envision an eventual return to 108, which is now almost a confluence of this horizontal support resistance area and the ascending triangles support trend line. So I do think that the path of least resistance until proven otherwise, meaning until we see a breakout from 113, remains to the downside. Of course, there is always the option, which is the one I'm taking, of doing nothing and just keep monitoring the pair. Now, having to do with stocks, I remember that the only thing I said when I joined, like for a few minutes from New York, is that it's likely that the S&P will want to break out from this 2815 level, because there are a lot of stop losses there, so they might be quite tasty for the market, and we might see another push to the upside. I think that remains likely. So far, risk remains very well bid. The VIX is testing once again this descending trend line support, and the 88.6% FIB roughly at 13. The DAX, after a very decent consolidation, which in my opinion not coincidentally came after reaching its inverted head and shoulders target here at 11,670, seems to be breaking above this little triangle, but be very careful because 11,800 is a very, very solid of resistance. FTSE at the same time, after an equivalent consolidation in a flat bottom triangle, seems to be breaking higher as well. So far getting rejected intraday from the 200 daily moving average, but it looks decent to the upside so far. Nikkei is still trading within this ascending channel. I have to say, for the exact same reasons that I was talking about, having to do with the USD yen, Nikki, doesn't convince me that it's ready to move higher. This channel move higher even doesn't convince me that it has an impulsive characteristic. So I have to say that I would still favor another leg lower here. I had to cough. Now, let's go back to FX, because there are a few more things. Actually, before we go to FX, since we started with copper, let's have a look at a few more of the metals. Gold rebounding, but as I was saying to the meeting we had with the guys, like some guys from our chat room joined, and it was a pleasure meeting them all, like JT, Etsy, Jeff, Leon. We had a little conversation about gold as well. I said I still favor, even if we have another push to the upside, I still favor the downside, as long as this confluence of the 61.8% FIB and previous support resistance area at 1320 holds. I still think that there can be more weakness coming for gold, and the same situation is true for silver. Here it is. Silver made the move first, breaking below this channel. This rebound so far looks corrective to me, so perhaps something like this play out from here, something like this. Let me see, by the way, if we have any questions. What do you think of the VIX at this level? It's at support, Dylan. The VIX is at support. It can still depreciate further. I mean, we know, especially the VIX is an instrument, it's a very easy instrument to play, to toy around with, and they use it very often, to get stocks bid. But I would be careful. I would definitely not sell volatility here. I can tell you that much. I mean, there can be more upside from here, but I wouldn't be selling volatility. After such a pullback, I don't think, as I've said, a long time ago, I don't think it's easy for the market to go back to the days that we had, like 8-9 volatility and nothing happening. I think that this is probably a little calm before the next wave of the storm. I think 2019 is probably going to prove to be a very interesting year, and the fact that we've had like 3 boring months doesn't really 2.5 boring months doesn't really change my point of view. Now, Andre, I know you're here. Coach, do we have an interview today? So
No.
we don't. Okay, so we can. So I can talk about a couple more things, and then Andre can come on, since we don't have any interview to actually mess around with. Okay,
I'll interview Andre.
Why not? Don't ask him about his cooking, though, please.
He's one of my favorites.
Yeah, mine too.
Isn't that how we discovered him, through an interview?
Not sure, actually. I feel all of them. But very likely.
Anyway, so, good discovery, Steve. You're good star search.
A couple more things. Bonds. The treasuries are breaking above this triangle. This is, a bullish development. I was looking, and I'm still looking towards the 61.8, which is near 124. Equivalently, if we go to the yields seem to be breaking down below this triangle. Now, having to do with the bunds are actually, having the exact opposite move. They're correcting lower, but you need to be cautious here, because the bunds have already produced a big breakout from this multi-year corrective channel. So one area of support they're currently testing, and even if they break below that, there is another area of support coming at 162, 60, 70, confluence of this horizontal support resistance area and the broken channel trend line. So, we might get a reaction from there. That's what I expected some days ago, and, that's how it's playing out. I also want us to have a look at what's happening with crude. I have to say that I'm a little bit disappointed with crude, and the reason is, let me go to the proper chart and I'm going to show you, is because, in some peculiar way, I actually predicted price action so long time ago, like almost perfectly, but I never managed to enter again because, I predicted a little bit of a deeper pullback here, never came, a little bit of a deeper pullback here, never came. But webinar online, okay, whatever. But
Hi,
keep in
Amanda.
mind, let's see when we're going to persuade. Actually, I have to give you a little secret. Joe and I are trying to persuade Amanda. There is
It's no secret.
Real Vision is now starting doing interviews and shows in London as well, and we
She'd
think
be
that
a
Amanda
star.
should be a star for sure. And we're trying to persuade her to go there and have an interview. Let's hope that we actually manage to do so. So crude broken above this triangle. If you remember, Coach, before I left,
Yeah.
I was very cautious about the bearish case scenario here because I said
Yeah.
multiple times that we're trapped in range.
You kept saying you needed confirmation under 55.
Yeah, and I
never
said
got it.
and the longer, the more the days passed and we didn't get that breakdown, the higher the chance became that this was just a consolidation in time and we would see, another push to the upside. The question is what happens from here? Because we satisfied that one more push to the upside. I mean, we did break and stay for at least a couple of days to multi-month highs. But we're seeing so far this attempt of a reversal lower today, and I want to see how this is going to develop.
I have a line at
Obviously,
59.5, Steve, and it's kind of a broadening top formation. I think it's
might be the case. Also, 59.60 is also the 50% fib.
I just noticed that that fib there, and it comes in with the line I have up there. Yeah, I abandoned my bearish view Friday on that spike where we came back all the way, and also it kind of gave me the possibility, since crude and the S&Ps have been kind of trading together, that my short positions in NASDAQ may not work out. But those I stayed with, unfortunately. So I'm not in the camp that 62, 65 is going to come easy here. And I'm thinking that
we're definitely running somewhat out of fuel. I mean, the loss of momentum is more than obvious. We've already covered a lot of ground from the lows. So admittedly, there is absolutely no chance I would be buying up here. That doesn't mean that it can't move more to the upside.
No.
But what it means is that I see no valid risk-reward ratio for somebody to be looking to the upside until we finally get some deeper pullback. Now, obviously, if we get rejected from here in crude and we start some kind of a deeper correction, expect this confluence of supports that we were talking about before in the USD CAD to hold. So far, we are seeing a reaction from here. And if that is the case, we should be looking for more upside for a move towards 136. That's why I said to begin with, it's the first thing I talked about. We are at a critical juncture here in the USD CAD, to see what kind of a move higher we have. And obviously, if crude gets rejected from here, it's going to help USD CAD make its decision on where it wants to move from here. And in that case, it's probably going to be moving to the upside. CAD yen has already seen a breakdown from this ascending channel. If you remember, I mentioned multiple times that this move higher is corrective. Nice rejection from the confluence of the 200 daily moving average and the 61.8. And if indeed crude moves to the downside, it will perhaps help the CAD yen also form some kind of a head and shoulders formation. Here you can already see a potential like shoulder, head, shoulder, in which case we might see more downside, especially if my point of view about the USD yen also proves to be right, that USD yen, the closer we approach to 113, the better of a risk reward it provides to be short. So if both things play at the same time, I mean, crude moving lower, USD yen getting rejected, CAD yen should suffer quite a lot. Probably it's going to end up being one of the best pairs to play to the downside. So having said all that, I want to wish everybody a great weekend. Andre is going to, I'm going to pass it to Andre so he can share his charts, his point of view, and we will be back on Monday. Let me find Andre. There he is, making you the presenter, mate. There you are.
Hello, everyone.
Hey, Andre. Welcome.
Hello, Steve. How are you?
I'm
Mr.
good, mate. Trying to get some rest to charge my batteries.
Yes, I guess so. Good luck with that. Good luck with that. All the best.
Thank you, mate.
My screen. I want this one. Okay. So you were talking about West Texas oil.
Yeah, it's a good place to start from, actually, since we're talking about that and the possibility of rejection. What do you think about it?
Well, I don't think there's a shark there, so the pattern is completed. So usually on those situations, I don't think too much. I can think about the probability to form the pattern or for the pattern to complete at some point. But at this point, we are talking about a potential rejection to this Fibonacci level, the 161.8 extension. If the price keeps rejecting this Fib, there's a possibility to trade at the default targets at least a 50% retracement. This will put the price retesting this previous resistance. It will turn it into a support and eventually a bounce from these levels. I will not be surprised. Obviously, we need to well, I still believe there's the probability behind the pattern. So on those cases, I don't think too much, Steve. It's there already. I don't need to forecast or to project anything. We are now facing that possibility. Published before, very similar as all the others, actually being very productive. Actually, something is missing here. As we can see, oil has been very constructive in terms of harmonic trading and harmonic patterns during all these corrective structure, if we may call it that way. So we have one first impulsive momentum, and this is a huge sideways process. I also was thinking and we need to go into a daily time frame. I believe I don't have these draws there. On a daily time frame, I was expecting to see oil trading a few points higher.
Can we still hit that blue line, Andre? That it looks like you have the same line I do. It's kind of like a megaphone.
This blue line here. This is like it's like an expansion.
Expanding, broadening formation.
Yeah. There's a lot of names we can call it, but let's say higher highs and higher lows. So for people to understand, the price action is printing higher highs and higher lows. And during this sideways moving process, we expect something like a 5 or 8 waves structure inside this huge process. Usually I search for a 5-wave structure inside this megaphone formation. But at this point, we are, as I said before, we are facing this specific Fibonacci level. It's a small relief here. Obviously, this is a daily time frame on a 4-hour time frame. This is the trade. The trade will put the price trading just a few points below, but that may also end up forcing the price later to retest the lows, the previous lows at 54.68 or around that level. Previous structure support, or the pivot between this previous structure resistance and support level, and that can also form later one eventual heads and shoulder formations, which needs to develop. We need the breakout. We need the right shoulder. We need a breakout of the neck. But if that happens, a reinforcement of this level, this pivot zone as previous resistance, later as support. A bounce from this level may turn oil into a bearish structure if the pattern gets completed. At this point, I get focused not only on this specific pattern, but also the previous daily support below at 54.37. So at some point, I will not ignore the possibility to retest these lows. Obviously, we have also the 200 moving average approaching from below, actually acting as support at this previous daily and 4-hour support level. I will not ignore. Actually, the market is now trying to break below the most recent lows. Previous daily resistance printed last first day of March. Weekly resistance was printed a few days earlier, and we are now trading above those levels. I believe if the market, if oil decides to not recover, but to fall below those levels, it will increase the probabilities to trade even lower. So the pattern is formed as published before. I published the pattern before the breakout of this resistance level above on ForexAnalytix. So for those who are at least being there, you are already familiar, and you already know that there's that pattern completed. SEC. Not one of the charts that we used to cover, but I found some interesting behaviors here, and that I want to share with you. First of all, the weekly time frame chart. I published this not inside the ForexAnalytix, but I shared this chart before the pattern gets completed at 224 extension. So I was expecting the formation above this small sideways process. I was expecting a new highs to form this 224 extension shark pattern. The default target for the shark will usually search for the 50% retracement as usually, or as usual, and a 50% retracement will at this moment, and based on a simple projection, will put the price searching for that 200 moving average. That can happen a few points above. The 38% retracement, also a nice position. Previous structure resistance and support levels at 38% retracement. This is a weekly time frame on USD SEC. If we go into a lower time frame, 12 hours time frame chart, we have this false breakout above and a violation of these previous structure supports. If the price decides to break below this level, I believe they will search for one of those extension levels. Usually we will search for the 161.8 extension by default as the golden Fibonacci extension, as potential reversal Fibonacci level. And if the market fails to use this level as support above the previous one, will violate that support, the previous support level, and eventually the 224 extension a few points below. This is those are the shark pattern completion points. Note that inside this huge range, we can see the market reacting inside this range. We don't need the price to bounce specifically from those ranges, from those fibs, but we can see some market reactions inside a huge range between the 161 and 224 extension. Usually, obviously, I will search for an engagement if I need to participate in this pair. I will search for a specific level to search for entries, obviously, but we need to consider this range as potential reversal box range. And because we also cover USD NOK, and this one has been published before this fall, so I was expecting NOK to form this pattern a few points above. I was expecting also the breakout above this previous monthly resistance. This resistance has been printed last December 26th. So I was expecting somehow the price to hunt all those tops above. Usually they do that. They will break those major resistance and support levels, hunting those tops right above. But this time they decided to, okay, this time we will not hunt them down. They respected the 127 extension from this first swing. So this first impulsive momentum extended at 127 extension, and the market has decided to pull back. So this is pure speculation at this point. Actually I can use this again. So this is just a copy of this previous behavior. If I move this here, and if I mirror that behavior, and if I set these levels here, I will not be surprised to see NOK pulling back from this level, forging one eventual head and shoulders formations with the head printed at the monthly resistance. Obviously, the right shoulder can be printed with limits at, let's say, if we need a limit to search for the formation of the right shoulder inside one eventual head and shoulders pattern, I will use the 78% retracement. And by manuals, this is the limit to form the right shoulder. So I will not be surprised to see that happen. I hope not, because I know that we have a pattern in play shorting NOK, and I truly believe there's room to trade below on NOK. But this is what we are now facing. This is previous daily support. Eventual bounce from this level will not be surprising. And obviously, I'm telling you about the eventual formation of the right shoulder at 78% retracement, but we can see that right shoulder being formed below, and actually let's consider that possibility too. So a right shoulder and then a violation of the daily support, and that will trigger the pattern short opportunity, and that will eventually force NOK to trade even lower. What we have more, I'm completely away from most of the yen pairs. We have this. I was checking today this to see if I see something on dollar versus yen, and actually it's only a 2 hours time frame chart, and one eventual. Actually, it's trying to break below this. We need to go into a lower time frame, 1 hour time frame, eventually into a lower time frame. This is kind of an head and shoulders also, and well, 78% retracement. There's a pattern at 88% retracement, which is the default bearish BAT pattern. But the market has started to react from the 78% retracement. So at this point, I doubt.
Free drive there, Andre, on the BOJ last night.
BOJ, you need to remember.
Bank of Japan.
Bank of Japan, yeah. And at this point, well, if they keep printing new lows, and specifically below these supports, I believe they will keep trading even lower. Obviously, we have patterns above between FIB extensions, the 113 extension, the 168 extension, that will put the price retesting these major. Let me increase this time frame. The 168 extension at 113. That will print a crab pattern at 168 extension. So this is kind of a projection for more bullish upside momentum. And
okay, so not a lot of conviction on this. Going home on the weekend, Andre. I know that there are things that you probably have, that you're waiting for and stalking and see. So, in the end, if you don't know, I mean, sometimes the right trade is a no trade, right, bro?
Oh yeah, completely. I prefer to stay away than sometimes to try something, because if I can't see something immediately when I look into my chart, it's because there's nothing there to see. Eventually you can see other things that I can't see at this point. But based on the specific technicals that I'm searching for, I can see, I don't feel comfortable looking to those yen pairs at this point, so I prefer to stay away.
Could I be selfish and say that the S&Ps tried to take out the highs made earlier in the week, NASDAQ too, and they're coming off? I'm wondering what you have there, if there are any harmonics there.
Let's go into S&P. I have a short position on S&P from these highs. Actually, this is a partitioned position because I shorted at this first high, and the market has recovered already to my entry level.
Did what I did.
So at this point, I'm still holding a small portion of this trade. I still believe there's room to trade below. There's a daily time frame chart that I shared among our community, or a 12 hours time frame.
Oh, I remember this.
Okay, this is the default bearish bat pattern at 88% retracement. It doesn't look like one, but we have all the perfect conditions for the pattern to work. At least in terms of Fibonacci ratios, we are talking about swings, and between those swings, we need specific Fibonacci criteria that will validate or not the possibility to form the pattern at the specific Fibonacci level. So at this point, we are trading a few points above, considering a daily time frame. We are trading a few points above the 88% retracement. This is the default completion point for the bat pattern. I still believe there's room to trade below, retesting these lows. But it's a pattern, as many others, that sometimes will fail, sometimes will work. There's something that I want to remember you, because we talked about this earlier, and let me delete all these draws. I told you last December, when the price was printing those lows. So based on the Fibonacci criteria, or the Fibonacci levels that we have here. So we have the market extending below almost at 113 extension. Actually, the market has nearly surpassed the 161 extension. And I said to you, okay, eventually, based on those Fibonacci criteria that we have, if I need to search for a pattern at new highs, and based, again, it's just not based on any fundamental approach. We can talk about some stocks that can drive S&P to those levels. Eventually, I have a few stocks, Activision. I can Microsoft. We have Nvidia. I have a few. I have a few stocks with not only for S&P, also for Nasdaq. You have a few stocks projecting some, which is possible to project patterns at those levels, based on the
3,200.
No, this one it will trade a few points higher, 200% extension.
3130.
Exactly.
Okay.
Exactly. So this is the pattern that I will.
Maybe one more break like you're looking for with this current active pattern, if it rolls over, and then a blast off.
Exactly. That's exactly what I'm expecting. So I still believe there's a possibility to retest those lows.
And I'm hoping.
And then,
which is dangerous.
I don't want to be bold on these and to exaggerate on my view, but man, I can see a default projection, a symmetrical projection that will put the price around the 168 extension from this previous pullback, or this deeper pullback here. The pattern will complete a 200% extension. Eventually the 224 extension, a few points above. But let's get focused. Let's keep focused on the 168 extension, because usually that golden fib ratio will produce some pressure there. And if somehow we are holding a buy position there, I always suggest, if you are touching the 168 extension, at least start to partition your trade and adjust your stops at profit or whatever you need to do to secure your capital as soon as we touch these levels. So
I'm so glad I asked about this.
Yeah, but I was thinking about to show you, because I know that you have special interest on S&P and Nasdaq and EWM and ETFs, and also
Only things I have money on.
Yeah.
It kind of makes me interested, but
of course,
especially when I'm going through a drawdown, I'm looking for, I'll go looking, and I'm sure everyone does this. You're not sure about the trade.
Of course,
you ask other people, and maybe they give you some hope because they're, seeing something that could still play out. So thank you for giving me hope today.
That's the precious of being inside ForexAnalytix, so Dale. No,
yeah.
I believe it's an extremely enjoyable and I don't have a description I don't have words to describe also actually what I feel with our team inside ForexAnalytix. It's amazing, the dedication of people.
How about LOVE?
You need to translate that for me.
Yeah, all right, okay. Anyway, love makes the world go round. So Andre,
exactly.
could I ask you for one more, and we could wrap up the day?
Of course.
Where's your head at in gold?
Gold, very similar as Steve has mentioned before. So let me push that chart for you. Another one that I still inside, so I still positioned on gold from above. So I shorted the market at 1342. This previous weekly and daily resistance printed above, few points below. We entered the trade. Great pip, but the market has failed the 38% retracement. And let me push a few minutes back or a few seconds back, and let's go into silver, because beside gold,
isn't it?
It's stronger, but not only. It has completed the specific pattern below.
Right.
And this one, for those who are subscribers inside ForexAnalytix, you already know about this pattern. So this is the sharp pattern at 168 extension. Let me delete this one because I didn't share this possibility. Previous daily support, previous resistance, 168 extension, and the potential reinforcement of this ascending structure trend line as previous support, or as eventual or a virtual support, as I like to call them, before the reinforcement. So I need the price to reinforce this structure trend line to call it a trend line support. So this is a support, 168 extension. I was expecting this pullback, and I said to you last week, I will not ignore to see gold trading above, retesting the previous structure support. This is silver.
Yeah.
At the same time, I was saying that regarding to gold, silver has completed the pattern and it has bounced, and it's now forming one eventual and for now also virtual edge and shoulder formation, which requires, first of all, the violation of this previous weekly support. The market has recovered above this weekly support, which means something, or which can mean something. The price can bounce from here and print as one eventual, or at least retest the highs, and the probability to print as, let me try to push this tool, to print as a bat pattern. If the market rejects to trade lower, obviously to bounce from there and to search for the highs that will put the price 1610, printing a default bearish pattern at 88% retracement. But again, we need to observe the market conditions once the price approaches those levels. At this point, I see the eventual formation of a right shoulder. So what this means is this is the left shoulder, we have the head, eventual reinforcement of the previous support, right shoulder, and we need a violation of this daily support positioned at 1498. A violation of this support will reinforce this idea, and the default projection of this pattern will put the price retesting this monthly support. This is silver. On gold, it's very similar situation, but it's note that, how can I explain this? Let me push again this back. Look at these charts on a daily on silver.
Right.
So silver monthly resistance is printed above. So silver has printed kind of 50% retracement, golden fib. I'm not sure. Let me just.
Yeah, I like that upper target you have at $17.
160 on APEX extension.
Yeah.
That is another level that we will talk about that later if the market offers that,
right.
that possibility.
Okay.
At this point, this is this is 78% retracement. Let me check just this Fibonacci. So this is the golden fib. The market has rejected the golden fib on silver. At the same time, gold has pushed the 88% retracement from the monthly resistance. So let's say the silver has been pushed from the bottom into the golden fib. Gold has pushed up into, so let's say the silver chart is a shark pattern at confluence at the golden fib, and we have the default bat pattern at 88% retracement on gold at the same time. Actually, at the same time, the market has printed this bearish bat pattern on gold. We have a double top on silver, and then they both fall from those highs. So I still expect gold to achieve the minimum, the Fibonacci level, which is the 38% retracement. Actually, the market has failed that Fibonacci level, sorry, just by a few points. I still believe that can happen. It may take us a few days for that to happen during the next week. Eventually, let's say a violation again above this 4 hours resistance. Eventually will trigger the price to trade even higher. But until there, I still believe there's room to trade. I'm not sure what's happening with my trading view chart, but I believe there's room to trade below on silver and also on gold, and similar on copper, because you mentioned before, and I'm completely synced with your approach. I'm not sure if I have a 12 hours time frame chart here. Not yet. Yeah, at this point we have only these daily, or let me push this. I'm not sure if I have a weekly.
Oh, yeah, that's a weekly. I recognize it.
Yeah, that's a weekly time frame. Okay. 88% retracement from this bottom, default bearish bat pattern, double bottom, and we are now trading above the bottom of the, trading above the next zone from this double bottom. So usually when I see a double bottom, I project a retest of this bottom, the neck. So I need a retest of this next zone. First things first, I will not ignore a bounce from this level, and the eventual 2618 by default. I will wait for the pullback to the golden fib, and this, as always, and as mentioned before, can trigger into a default and symmetrical ABCD pattern that will put the price at 78% retracement from these highs, and that will print also another and eventual and virtual for now default bearish bat pattern a few points above at 88% retracement. We need to wait for the 88% fib. At this point, it's completely nonsense or completely projection that makes no sense for now. We need to wait for that to happen. We need to wait for the price to approach those levels. At this point, I will not ignore the possibility to retest the next zone from this double bottom. The formation of a 2618 if the price searches for this level and if the price starts to bounce from the golden fib, it may offer a nice opportunity to go long with stops position below the double bottom. We already know the validation of a double bottom with the broken neck validates the pattern as a potential reversal. So if the price is trading lower at this moment, we expect the price to trade higher. That's what the price is doing. That doesn't mean the price will reverse at some point that will print new highs. No, but it should provide some interesting, at least a three-wave structure. It's a minimum that I am expecting. So we have a new low below the previous one first swing, a second wave, and the third one, at least a minimum third one to at least or to retest these highs or a new high. Yeah.
Okay, what a great presentation. Once again, you never fail. I mean, you know, I have clarity on the metals now, definitely in the crude. So thank you so much for dropping in, Andre. It's always,
thank you very much.
You know, it's always edifying. Okay, the word I would use is thank you for coming in and showing your stuff. I love your work, and it's helped me. It helps me all the time. So let it help you face listeners, and everyone have a great weekend. You want to say the tagline, Andre?
Don't just count your pips, count your blessings.
Okay, and you know what, Andre, working with you is one, and calling you a friend is even more so. So Anne, you're very welcome. I'm glad you enjoy our service. Consider being a subscriber. Marius, you as well, and everyone have a great weekend. Remember, your best trades for next week are planned over the weekend, and we'll see everyone on Monday. I'll have a nice interview lineup again next week, and thank you for your support. And the way to say thank you, if you're just a member of FACE, is to subscribe. And it's going to edify you and also give you an edge in the markets you don't have without being a subscriber. Guarantee it. So,
and Dale, I'm sorry to interrupt you. Another way to say thank you, and this is just a language from Portugal. It's obrigado.
Obrigado. Obrigado, Andre, my trading warrior brother.
Thank you very much, and have a nice weekend, everyone.
Okay, obrigado, everybody. Have a great weekend. See everyone Monday. Adios in Spanish, but I'm going to start using obrigado.
It's
all right,
Portuguese.
bro.
It's Portuguese.
Okay, I'm going to use
in Spanish. In Spanish, it's gracias.
Oh, okay. All right. Yeah. See, you know, I'm just an ugly American, Andre. All right. I know one language and not
beautiful,
that well.
A beautiful people. Thank you. Thank you.
All right, bro. I'll see you.
Thank you.
See you, everyone. Take it easy. Adios. Obrigado.